chance to ask any question regarding the artificial intelligence, how they are using it to detect the suppression. Hakamba, do you have any question for David in regards to the artificial intelligence, the detection of the anomalies?
Thank you. So maybe what I can ask, because from David's explanation, we can see that having a system in place is one thing, but then ensuring that you have mechanisms that can be able to enhance compliance is the most key to enable us to be able to be successful in this implementation. So what I would probably ask, in the consideration of technology, would we be looking at the deployment of artificial intelligence from the onset of the implementation, or is it something that can be given consideration over time, and and also continuous review to make sure that you're on top of things when it comes to the mechanisms the taxpayers employ to not comply? So is it something that we have to keep reviewing, I think that's what I would be asking, or at what point are we taking this into consideration?
David or Vinicius? Let's go to the question.
Yeah, maybe I can take from here. I was going to complement something that David had said. First of all, the experience we have in the member countries of CIAT is that there are a lot of taxpayers who want not to comply. And then it doesn't matter which strategy we use to control them as a tax administrative perspective. It doesn't matter, we have paper invoices, you have fiscal devices, you have electronic invoicing. They choose not to comply, and there is a lot of strategies for them for achieving that. This is one comment. The other comment is that electronic fiscal devices, no matter what technology you use, if it's only software-based, only hardware-based, if it is the Internet of Things with automatic transmitting of information, they are subject to other type of frauds, like ghost devices that are not compliant, such as changing the information on the ERP about the tax conditions of that particular good. You know, if I read this barcode, it will be shown to the buyer as one thing, but registered as another thing and transmitted as another thing. And then there's this kind of thing. So the kind of this is that Hakamba, I think, had asked if we have, or if we have seen some experiences on how to avoid this kind of behavior. The thing is that there is a number of different strategies you can adopt. One of them is to use what we call citizenship programs, where for the taxpayer, for the consumer, it's interesting to check out if this particular operation had been transmitted to the tax authority. For instance, in Portugal, they don't have neither of this, the strategies they were talking here. They don't have neither fiscal devices, neither electronic invoicing transmitting to tax authorities. They have electronic information on invoicing, much similar to what we have in Africa, in Angola. So what do? They give the consumer the right of deduct some of the VAT they have registered on invoices with their taxpayer number from the income tax. I'm talking about personal income tax, not companies' income tax. This is one kind of strategy you can use. So if the consumer doesn't have the rights, doesn't detect the right of this deduction, will be one form of demanding the seller to send the right invoice to the tax administration. Another kind of strategy is we see in some states of Brazil is that you can, if you reach a number of electronic invoices or it doesn't matter, it's information on invoices transmitted in an electronic manner to the tax administration. For instance, 150 different receipts will get a deduction on your property tax on vehicles. Some kind of those strategies that will be become risky to taxpayer not to transmit, or for any kind of strategy they can choose the information about the invoice to the tax administration.
Thank you, Vinicius. I think we lost the communication with Jane for a few seconds.
Yeah,
hello, confirm
like
that you can hear me. I lost my connection. Yes. Sorry for that. It's a cable that was interfered with. So thank you very much, Vinicius, for responding to Kakamba's question. Do you have any other panelists who would want to ask a question in regards to the first conversation, as in the conversation regarding the first question? Yes, Hassan, I can see your hand. Hassan?
Okay, thank you, Jen. I wanted to just add something very small to the strategies of David and the colleague. That it is also important that we have either a tool or a team of data analysts that can quickly analyze the data that has been received either through the EFT or the electronic invoicing in real time, such that they can alert the field teams, they can alert the stations to take instant action. Because they are able to analyze this data in real time, they are now able to avert any fraud tendencies done by the taxpayers. So if we have that team, they can also be able to help us to curb that gap. That's what I wanted to add. Thank you.
Thank you very much, Hassan, for that input. Any other question before we go to the next question? All right, let's move to the next question. And I'm going to start with the context of the question. The proper usage of electronic fiscal devices has been a matter of concern for tax administrators post-acquisition of the devices by taxpayers. Among the techniques utilized by unfaithful taxpayers or non-compliant taxpayers is generalizing the description of goods to avoid further inquiries regarding the amount quoted on the fiscal device or on the fiscal invoice when compared to the goods purchased or service rendered. The question is there a mechanism through which all items sold by taxpayers across various economic sectors are pre-installed as a drop-down list in the device or the application, so as to ensure that every item is described by its specific name as opposed to a general term or name? David?
So that's very interesting question, because commonly in the jurisdictions we have a lot of descriptions for the same items, and it's not standardized. So precisely, and Vinicius could speak more about this later. It is very important, and is a very big project for the tax administration, is trying to standardize I guess that we have some return microphone. Maybe we can mute. Okay, so it's a very big project to try to standardize the descriptions that we have for these items, and it depends of how it's managing in each country. The idea, and also to explain a little more, is that we can use even the application of this technology of artificial intelligence and other data analysis to try to define and standardize description of the items that we have for the exchange of goods and services. And that's one of the applications that we are finding and start to explore how to do it. Vinicius, maybe you can continue from this point.
Yeah, I know of one successful experience that comes out not from fiscal devices, as David had already mentioned. In Latin America, as a matter of fact, we are abandoning the use of fiscal devices in favor of only electronic invoicing for a number of reasons. Most of them, one important of them, is related with the question, the cost of the device. So it's it's an important cost to have one of these devices, no matter technology you use, especially for small taxpayers. The other point of this question is the number of tax officials we need to put in the field in order to be sure that equipments are well used, and all the things that you have related to this. The other aspect of the question is the, let's say, pre-filling or preloading the information about the goods. This is real complicated because the differences that you have among taxpayers is huge. You have the small business in the corner that sells, you know, bread and milk and whatever other food, and you have in the door side the one who sells plumbing, in the other else the sells, you know, any other kind of goods. And our colleagues from Mexico started an experience using the codification from the UN, and it reached almost 100,000 different codes. And they didn't have a good experience on using the information. The other experience we have, as I started saying about, come from Brazil, but in the use of an app. There is an app that is made available for the taxpayers for issuing electronic invoicing. And the taxpayer is segmented. If you are a rural producer, if you are a small end consumer selling, if you are a transporter, and for each of these different segments of the economy, you have different ways of coding either your service or the goods you're selling. But coming down to the rural experience, so there are a lot of codes that you can use. You have WCO codes, you have national country codes, you have GS1, GTIN, and it's really complicated to have something that is useful for taxpayers. And at the same time, it's something that David have mentioned, that this information can be used by us as tax administrators for any kind of need we have. You're muted, Jane.
Thank you very much. I can see Hakamba's hand is up. Hakamba, over to you.
Thank you. So my question is to Mr. Vinicius on, I think, just stepping back on the experience you just mentioned for Mexico using the UN classification code. I think you briefly mentioned that they did not have a good experience. Perhaps a few highlights on maybe the areas that they found they found a challenge in using the codes, or any other codes in the countries which you have had the interaction with.
Yeah, about the using, this is they call the normalized codes, and then they are constructed first for international commerce. And in this kind of codification, to talking about transborder commerce, the main concern is basically security, either health security or security as a normal for explosives and things like that. So in this kind of coding, normally it's the details you have on the merchandise are not enough for the needs we have on internal taxes. For instance, in VAT, there are many countries that made a differentiation on taxing mineral water with gas, sparkling water, and plain mineral water. There's a difference on this kind of taxing. And in all the normalized codes, we'll only say this is water. And other kind of differences that we can point out is that some kind of milk in many countries we have fiscal benefits because it's an essential food. But if you have milk with chocolate in a Tetra Pak box, this is not reached out by that fiscal benefit. And the normalist code will just say milk. So this kind of the main difficulties you have on using the information. One. The second point, for taxpayers, it's not easy to use a code that is not, sorry for the pleonasm, useful for them. So they will just put out any code that doesn't really describe the good or services they are selling. And you only get to know that when you go to this kind of strategies that David was mentioning with artificial intelligence to analyze the information. You say, okay, this cannot be what this code means. And then you go to the description of the good and say, okay, what this guy is selling is not what he had coded and put on the document.
Thank you, Vinicius, for that explanation. Do you have any other panelists who may want to engage Vinicius or David on that issue? Okay. Yes, Honest Joe, go ahead.
Yeah, okay. I had the contributions that have been made, especially regarding the challenges that countries have faced. But I would like also to put a bit of input. I think, especially for the supermarkets are one of the best examples of people who, courtesy of their nature of business, they now must ensure that each item is very well described, and they have less incentive to, of course, to cheat. So I was wondering whether that could be a starting point, that if we can get information from the supermarkets, because in most cases their things are very well coded, then we could have some standard description or naming that can be easily understood and perhaps widely or commonly understood and accepted. So that is what I was wondering, whether it could be of aid.
Yeah, honest, it's perfect. You're talking about the GS1 codes that I'll call the General Trade of Identification Number, known as GTIN. And yes, for this kind of taxpayer, it really works. Because as I said before, we're talking about a code that is useful for the taxpayer. And this code specifically was designed for that, for the needs of this kind of commerce, for automating the selling. What the problem we have with this kind of codes when regarding to tax administrations, let me take the example of Coke, a can of Coke. Maybe all you know, but if you don't, I'll elaborate a little on that. The code that you have, the barcode that you have on this Coke can, identifies not only this is a 300 milliliter can of Diet Coke, but it was produced by this particular industry. So you have two different industries of Coke in your country. You have two different barcodes for the same Diet Coke can of 300 milliliters. And what we need basically, if for tax purposes, if this is a can of soda, so you have to have a from to list where you convert all the GTIN codes for all the cans of sodas for one single code. It's the other range of the problem. I've talking about the normalized codes when the codes are not detailed enough. And in this case, the code is over detailed, and we have the problem on getting the information about the imported goods. When the goods are produced inside the country, that's okay. We can have access to the complete list of all the barcodes that are produced in the country. But we have a lot of things that are imported, mostly from China or from the United States. And we don't have access to the GSN tables from China or from the the United States or whatever country we're thinking about. And so we have to build our own tables of foreign GS1 codes for our purposes. You're right, the code is very trustable in this case, and supermarkets use them. But for us to use the information, you have another kind of problem. And again, this can be addressed with unsupervised artificial intelligence techniques of machine learning. Putting together the code and the description in natural language of the product, then you can reach out some conclusion about it.
Thank you. Thank you so much. Any other question before we move to the next set of questions? All right. Allow me to move to the next question. In the course of using the electronic fiscal devices, a taxpayer may erroneously enter certain particulars and thus prompting the need for cancellation of the fiscal receipt or invoice. However, the electronic fiscal devices capture valuable sales data that are vital for return filing, and given the adoption of pre-populated tax returns, the accuracy of sales data is paramount. This is the question. Is there a mechanism through which errors can be electronically corrected with the appropriate adjustments executed? Is there a mechanism through which errors can be electronically corrected with the appropriate adjustments?
Yeah, this is kind of one of the problems with fiscal devices, is that once you register an item, it cannot be unregistered. It only can be, get an extra information that this particular item shall not integrates the total of this invoice or this receipt. So this is the automatic way of doing things. You have the information about the item, then you have a second information telling that that particular item is not part of the real sale. And then we have, of course, an opening for fraud, because it can be registered that the item was not sold when it was in fact sold. So in this kind of fraud, again, I'll repeat myself on my first participation. You have to have other strategies in place. There is no automatic way on trusting only the information that comes from the taxpayer. Even if it's a big taxpayer and this one and the person who is controlling the device is an employee, because you have other strategies that can run in background for doing that kind of fraud, and it scales up in a much more proportion if the one who controls the cell is the owner of the business. So there are a lot of other, a lot of space here, is a huge space for other kind of frauds also. The thing is, something I hadn't commented before, it popped out in one of the questions and I forgot, sorry, is the, I think was Honest who talked about analyzing online the information that come out from the receipts of the actual sellings. This is complicated. Why? If you're thinking about the sheer number of operations you're receiving, it can reach out in countries like Brazil to 1 billion operations per day. And this kind of number of documents is real complicated for processing on real time. You have to think about other strategies such as data lakes and things like that for using the information on that. And of course, you lose what you want. That is the instant response of something that's had, okay, this is apparently a fraud. You have to go there immediately because this guy will go and will never get to him. And this is a compromise that's real difficult for us to attack.
Thank you, Vincius, for that response. I want to encourage those who are logged in through YouTube and LinkedIn, please share your questions, and our guest speakers will be able to respond to those questions. We move to the next question. As you said, this session is more of QA, questions and answers, so that our panelists can get as much information from our guest speakers as possible. And now I'm moving to the next question. Upon the implementation of e-invoicing, what enforcement mechanisms have proved effective to enhance compliance? Upon the implementation of e-invoicing, what enforcement mechanisms have proved effective to enhance compliance?
I would say the most effective mechanism that can be put in place is the automatic detection of potential frauds, but not in the consumer selling operations, but in the operations among taxpayers. Because here we have another kind of fraud that normally is much more harmful for the total of the revenue than just not reporting sellings for final consumers. That is the fabrication of operations. So I put up a company and I issue millions of dollars for using a common currency in non-real operations and send these invoices to a number of clients. So, and these clients can pledge that they are, I didn't know that this operation hadn't occurred. And I have the right of using, because I've paid this, and I have the right to use the tax that is exists on this invoice. This is a real common fraud. For this kind of fraud, you have a number of techniques of detecting that this is not a real operation. For instance, this guy is selling 1 million in currency and had not bought anything. Or you analyze the address where the goods are allegedly coming out. For instance, we're selling gasoline, and you see, just look at Google Maps and the photo of that address. It is a residential apartments building. So there's a lot of strategies you can put in place for detecting non-real operations. And you have, in this case, to act real fast, because taxpayers who do this kind of fraud used to operate in this with this inscription, with this particular taxpayer for 1 or 2 weeks, and then they're gone, and you never get the money you have. Even if you prove that this is a fraud, there is nobody there for you to prosecute or do anything.
Thank you for that. Any other question from the panelists?
Sorry, I'll just have to close my window because I have
the
sun that just came up. It's real early in the morning for us. Just give me a minute, please.
It's all right. It's all right. Akamba, you'll ask the next question. Just go ahead. I'm sure David or even Vinicius will be able to respond. Go ahead.
Okay, thank you. Now, just tying into that, I think from that challenge, the fabricated transactions, we call them the missing trade phenomena, I believe. I was just wondering to what extent, I know Mr. Vinicius has raised the issue of 100% coding of products as being a challenge in some countries, but do we see this as maybe a mitigation of ensuring that we don't have non-existent sales being declared through the e-invoicing systems? Is it something that has worked in some countries that once the taxpayers take us through the process of having to register the sales that they intend to make, then in that case we can be able to actually confirm that a transaction actually happened, and therefore mitigate this issue that the challenge of having the fabricated transactions? Yeah, that was my question. Does the product coding help with this challenge of fabricated transactions? That's what I was asking.
So sorry, I didn't hear the beginning of your question, Akamba.
No, I know you had said earlier, especially with reference to some countries who have implemented the UN classification code, that it was a challenge for those countries. But for other jurisdictions, we look at it as having the supplies within a business entity 100% coded with any kind of classification that is identified, and that classification being used down the supply chain as being one of the mitigations that have been put in place to mitigate the missing, we call it the missing trader phenomena, or the fabricated transactions. Do you see this, from your experience, do you see this as having worked? Is it successfully an approach that can be used to mitigate this challenge?
Yeah, of course. We have, as a matter of fact, we are initiating a work in this sense with some countries in order to get a way of coding that we can use. Because the thing is, if we come out with a code that is not of use for the taxpayer, we cannot trust this code. Why? Because it's simple. He or she will just put anything that passes out on the validation rules, and you'll have to detect if it was correct or not. But yes, the using of a way of codification that is both useful for the taxpayers and for us is the path we think that we should pursue. And the next question, okay, which code will we use then? But before talking about codes, I think it's my particular view, we should go out for the classification. We should think first, how do we want to classify operations? And then you have a huge difference among goods and services. So you have to classify first, and after we agree, basically with taxpayers also, in a classification that are useful both for them and for us, then we can reach out for a code that fits that kind of classification, and not the other way around. Because what we have already done is using codes that are in place that are not, were not thought out for the kind of needs that we have. That's why we face so much difficulties on using them. I don't know if I answered your question, Wakamba, Hakamba.
Yes, you did. Thank you.
Right. Thank you very much. Hassan, I saw your hand was up. Then Honest after Hassan.
I had a follow-up question. I was interested to hear more on the strategies that probably Vanasius has seen deployed in the different countries that is curbing the missing trader phenomenon. I don't know that I didn't hear them very well, but it wasn't clear, because this is a real challenge, especially in Africa, that somebody is going to come onto the system, even if there is the coding system, he will beat that validation, and at the moment he has already completed the coding, you will see him generating the invoices. I'll give an example back home here. What we are doing to curb it is that we have a data analysis team that is in place, and they are able to analyze the data such that if those invoices were generated, as an example, yesterday, they are able to see that this guy cannot have generated invoices of this amount, and when we check the corresponding purchases, they are not commensurate. And in such a way, we are trying to mitigate it. But I thought maybe from your experience, you have an automatic way through the artificial intelligence tool where we can mitigate, such that even if the system has the store, the artificial intelligence can notify us in real time, such that we mitigate it before this guy generates the invoice. Because the experience we have is that even if you go and stop this guy after generating the invoice, he has already generated it, and the other person is entitled to claiming his input tax. Thank you.
Yeah, I don't know if I understood quite right the question. If I did not, please rephrase it. You're talking about automatic ways of identifying that these cells does not correspond of or this reported cell does not correspond to reality. And if this is the question, yes. And you don't even need artificial intelligence for that. You can do that with, you know, traditional ways of programming using relational databases and traditional algorithms. Because, but what you have to have in place is some kind of getting the information electronically and in a trustable way for the goods that enter the supply chain. So you have to have a good control both on imports and industries. So you have the initial link of the supply chain, and then you can follow up both in a financial flow and a physical flow, the goods from the very beginning in the supply chain until they get to the final consumer operation. And so this is the kind of strategy we have seen in place in many countries, and it really works, because then you can identify, okay, this guy is selling, they are selling for this guy 100,000 monetary units per month, and he consistently sells 80,000. So after 3 or 4 months, you can call, okay, come here. You are not reporting all your sales. Tell me what's happening. And it's normally the answer, okay, how much do I have to pay? Because it stands out. And you're right, this is the kind of strategy that many countries have in place. Of course, if you put out artificial intelligence techniques, you can identify some not well exposed other types of frauds. You can identify, for instance, with the graph theory, that this particular taxpayer related in a second or third degree with all these others that are traditional frauders. So most probably this guy is also, and this guy is, you know, real good in not letting us know that he's committing frauds. So this kind of identify, of this way of identify things that is real good, and we can. I'm sure Dave had talked about to you on the anomaly detector. This is another kind of technology.
Thank you, Vinicius. The next question was coming from Honest.
Yes, I think mine is much more of an input after listening to the contributions that have been made by Vinicius, and especially on the issue of algorithms, because algorithms, I think, are the way forward, and they will aid in simplifying the entire effort that has been described by Hassan, which, according to his description, I think still there is something that they can do so as to automate that entire process. But I think the most important issue is the business logic behind. For example, when Vinicius talked about sales versus purchases, those relationships, I think that is the most important thing. It can also go to include the filing obligations, whether or not they're actually filing their returns. That might also be another red flag. So I think all those red flags, they can now be automated, and an algorithm can be generated so that they can be done automatically and much more faster. Because I think here the issue is the processing capacity. There is a lot of legacy data. So going through that legacy data manually takes a long time. So I think maybe if they can also enlighten us on that particular area, as far as the algorithms are concerned, those underpinnings, sales versus purchases, filing obligation, those risk areas, I think maybe they can give us further insight on that.
Yeah, I'll say there are basically two ways for doing that. But no matter which way you choose, there is a previous step that is needed. That is a trustable information on invoicing, and that's can be achieved. The easiest way is in a continuous transactions control strategy, like we have in Latin America, on electronic invoicing. That is one way of getting it. The other way of getting it is what Spain has done very successfully, getting electronic information on invoicing. And they mandate the taxpayers to report the information on invoicing. It's not electronic invoicing, but almost in a real-time manner. And then it becomes complicated for taxpayers not doing it right. Because if you have a large amount of operations, and if you don't do it right, sooner or later you'll be catched. So among no matter which of those two strategies you choose, you have to have in place a strategy of getting the data in an electronic way from the invoices in your databases. This is the first step. The second step is how trustable this information is. If you choose to trust reporting informations, most probably you'll face some trouble, because tax returns only serve for tax authorities. They are not of any kind of use for the taxpayer, for the company. So it is a very good opportunity for errors. And these errors can be on purpose or not. The errors on purpose are fraud. The errors that are not on purpose is, that you have to sanction them, okay? But the thing is, you have to have strategies in place to assure that the information you have in your database is trustable. Of course, for this kind of problem, again, you have two paths. The first is having real tough validation rules of cross-referencing on the information you get. The other one is to running detection algorithms that will point out that this particular invoice with 87% of assurance has problems. So you won't have, you will not have, you will not use the information on that invoice. So after you get trustable information on invoicing, then you can apply your algorithms. No matter your algorithms are traditional, based on relational databases, or they are artificial intelligence and machine learning algorithms. Most of all, what we recommend is that you have to have in place a mixed team with data scientists and experienced tax inspectors. because the data science will point, oh, these things apparently has a problem. Then you get the experienced tax inspector, the experienced auditor, they'll say, okay, this is really a problem. And say, no, this is not a problem, because in this case, they have this kind of legislation that allows the taxpayer to do this. That apparently is a fraud, but it's not. And after you run with this team and you have your algorithms tested and approved, then you can make the discoveries available for the whole corp of tax inspectors and auditors, because then you have a highly rate of sureness that what you point out is a fraud is really a fraud, is not a false negative, because nothing is more frustrating than run a very complicated algorithm and to conclude that 80% of things that you detected are not frauds. And this can be really a problem when you present the results for your colleagues, or worse, for your chiefs.
Thank you very much, Vinicius, for that sharing. What is coming out clearly, the way forward is to use the artificial intelligence. And from the algorithms that are run from this system, they have to be tested and approved. And the tax administrations must make use of a mixed team, whereby we have the data scientists and technical experts who are trained on tax matters for purposes of ensuring that we get the best from the use of these artificial intelligence or even the e-invoicing systems. So we move to the next question. Thank you very much. We are learning a lot. And for those who are logged in through the LinkedIn, YouTube, you're encouraged to share your questions so that you can also learn as much as you can from our guest speakers. So the next question is about what would it take to implement technology that not only facilitates the availing of tax invoice data to the Revenue Authority, but facilitates auto collection of the taxes at the point of sale. Allow me to repeat, what would it take to implement technology that not only facilitates the availing of tax invoice data to the Revenue Authority, but facilitates auto collection of the taxes at the point of sale?
The auto collection applies basically when you have sales taxes, the way you have in the United States, for instance. When you have VAT, it's a little bit more complicated because it's hardly to determine. It's hard to determine which is the amount, or the real amount of taxes that incurred on this particular operation. So if you have sales tax, it's really, really easy to do. But if you have the VAT, it's not. No matter which kind of tax you have, when we go to real small taxpayers, normally we have in place, how do you say it, the special treatments for small taxpayers, and then you have, this kind of company only must pay a fixed amount of money per month or per operation, and then it will be for the small taxpayers. I think this is more effective than just automatic collection on each operation. And for the biggest taxpayers, then it only works if you have sales taxes. It won't work if you have, it's my opinion, my way of view. It will not work well on VAT, because unless it's a real pure VAT, and then you can, just for knowing what you are selling, you are absolutely sure how much is the prepaid VAT in the previous operations. Then you can be sure about the real amount of tax on this particular selling operation.
Thank you very much, Vinicius, for that. Any question from the panelists in regard to what Vinicius has just shared with us? It doesn't have to be a question. You can also add your voice to the conversation, the panelists. Okay, I can see Honest Jao. Go ahead.
Yes, of course, I heard what Vinicius said, and I think this is in line with what the OECD is also talking about. There is, I think, a report regarding tax administration 3.0, so making taxation seamless. I think that is the direction, and perhaps that was the essence of the question, that if there is a way or mechanism through which some of the taxes can actually be collected straight away from the taxpayer system, whether it is pay as you earn and so forth, so that we can embed these tax rules in the taxpayer system. So I think that was the essence of the question, and I think that is the direction moving forward. But I also concur that as far as VAT is concerned, there are a lot of issues about adjustments and so forth. But I was wondering, and this now is a question, now with respect to the digital economy, taxation of the digital economy, because most of the frameworks for taxing the digital economy are simplified. And therefore, a lot of issues such as adjustments and so forth have been kept aside. So I was wondering whether or not this could still hold or could still be applicable in that particular area, because now there is less of those complications, whether it can be done straight away in the spirit of simplification.
Yeah, you're right. In the case of digital economy, it's much simpler. And as a matter of fact, we have a system that has been installed in many countries, for instance, in Nigeria, that provides support for collecting taxes of digital economy for non-resistant taxpayers. For instance, Airbnb or Netflix or Uber. You can we have a colleague that's not among us, that's Decio Carreta, who is in charge of that project. You have this system being installed, I think, in 6 countries right now. One that's Nigeria in Africa, and the other ones are in Latin America. But you're right, when you're talking about the digital economy, it's much, much simpler to do it. We're talking about services and goods. Services also not that complicated, even if you have VAT. But in the case of goods, yes, it can be really complicated to deal with all the exceptions that must be taken in account for getting a pre-filled return that is trustable. As far as I know, there are only 2 countries who had reached that maturity on using the information for tax returns. That is Chile for more than 5 years now, and Ecuador is close behind. And why? Because VAT in these countries is not a complicated tax. In the other range, you go to Brazil, and I know my colleagues there are working for more than 6 years and hadn't yet get to a pre-filled VAT return that can be trusted.
Right, thank you. I hope, Honest, you are satisfied with the response that you got from Vinicius. And if that is the case, then we can move to the next question. Honest, that is the order.
Yeah, I think I got what he said, and also I'm looking forward. I think I saw something on the CIAT website regarding a certain system. I think that they are currently developing for the digital economy. I saw something about that, and a user manual. That's why I was asking about it, but I think now it is very clear. If it's simple, then it's doable, but it's a bit complicated, then making it seamless might be a bit difficult. Thank you.
Yeah, the thing is with digital economy, with foreign established taxpayers, it's easier because normally you'll not have the treatment of this kind of taxpayers in your tax systems. So and there is no connection with your systems, so you just use another system to do it. That's why it's simpler.
All right, thank you. Allow me to move to the next question. I can see some questions are coming through LinkedIn, and we have one question from a participant by the name Jose Maria. And the question reads, what do you think about the strategy to simplify invoice data collection and decrease the taxpayers' costs? In compensation, all complexity might be moved to data analysis, investing in sophisticated algorithms to detect and correct tax evasion.
Yeah, my particular opinion on that is the most efficient way for tax administrations to get information about the invoicing is a continuous transactions control strategy based on electronic invoicing, 1. 2, this electronic invoicing must be the same document that's used in the operation between seller and buyer. 2, this electronic invoice must comprise all the details of the information. And 3, and must be electronic signed. 4. That this is not the approach that is being followed in the Asia Pacific area and in some countries of Europe, but it's the strategy that had been put in place in Italy, will be put in place in France, and is in place in most of Latin American countries. Why? If you have the whole information covered by electronic signature, this electronic document can be used for any kind of purpose. When we are old friends, there is no problem. And by we, I mean seller and buyer. But if there is a confrontation, then you need to prove, oh, you had not sent me what we agreed on, or you had not paid me for what I sold you. So this is why the electronic signature covering all the information of the invoice is important. And if tax administrations have access to the very same document, you don't have to declare, you don't have to report anything, because all the information on that operation is already known of the tax authority. So you get the simplification that most of us are trying to get in how tax authorities can get informed about the actual data on the transactions. The other aspect of it is the simplification of the information. This is something that's this is for the laws. We are tax administrators only can act on what is in the law. We cannot change the law. So if the law is complicated, there's nothing we can do about it. The third aspect of it is, I will repeat myself, so something I have said in the beginning, is you have to trust the information. That's why I've talked about continuous transactions control strategies with strong validation rules that only allows the electronic invoice to be used after it has been approved by the tax administration, saying, okay, this electronic file complies with all the technical rules to be considered an invoice. Then you can send it to your client. So then you get a lot of, you as a client can be sure that you can use this document for all the purpose you have. You know, everybody knows in the relationship among companies, the most benefits from electronic invoicing goes to the buyer. Of course, the seller has a lot of the advantages, but most benefits go to the buyer.
Much appreciated, Vinicius, for that sharing. So allow me to move to the next question so that we can get as much information as possible. So, and the question reads, with the advent of taxation of digital economy, especially taking into consideration of the non-resident digital economy taxpayers, what approach has been most effective to ensure that e-invoicing is extended to them without making it an inconvenience to account for taxes in the various jurisdictions? So this is touching on non-resident taxpayers who are operating on the digital economy.
Yeah, in most of the case of non-resident taxpayers, you have to work with them. It's for them, it's cheaper to do it right than do it wrong. And then you have to put in place strategies to get the information from them. And of course, this goes hand by hand with a strategy of electronic invoicing. But even if you don't have this strategy in place, you can put on a strategy on electronic reports, electronic informs. And that's not so effective, but also can be used. And it's not such a burden for the companies as long as we don't have much experience on that area. I'm frankly saying just about 4 or 6 countries that had experiences on that, as far as I know, but it's rapidly growing, the adoption of this kind of strategy.
All right,
Just
thank you.
To
David, go
complement
ahead.
what Vinicius said, one of the simplest way to have this control of transactions with taxpayers that are outside this jurisdiction is that we are using, or some countries are using, some retention of the tax when they have the transaction online. For example, with the streaming TV services, if the taxpayer pays for these services using a credit card, the credit card retains the tax for the tax administration, and then is collected by the credit card. So that's one of the models and one of the ways that it's more simpler to manage these kind of transactions in the electronic commerce and the digital economy.
Thank you, David. Any other questions from the panelists in regards to dealing with the non-residents who are operating in the digital economy? All right, let me go to the next question. For jurisdictions that are mature in e-invoicing implementation, what are the current areas of focus? For the jurisdictions that are mature in e-invoicing implementation, what are the current areas of focus?
Well, what we see is on the, basically 2, I'll say 3, 3 main areas. The first one is the pre-filled VAT returns, making them available to taxpayers. It's a real simplification, as I mentioned, in Chile and Ecuador. But what we really are seeing right now is in identifying that the codes, let's getting back for our first questions, that codes used are correctly used. This is can sound a little tricky, but it's really important to have your data depurated one and report back to taxpayers. Listen, you're not using the codification right. You should correct your way of issuing invoices in this way that is the correct way of using it. And then after that, the systems in place to identify structured frauds, especially if it is not a small country. You know, on medium-sized country and in big countries, when you have hundreds, tens of hundreds of companies, there are networks that are specialized in frauds, and then the processing information with non-supervised machine learning algorithms is something that we are seeing in many countries putting in place.
All right. Any other question or even reaction? Okay.
I think that
Yes.
also in some cases they are including a massive use of the electronic invoices. They are working in massification, not only business to business invoices, also business to consumer. So, for example, in some countries, they specifically in Ecuador, it is mandatory to use the electronic invoice because they have a more mature modeling right now to have this transaction. For example, the medical doctors, they have to use the electronic invoice. So it is the massification. In some cases, they are adding more taxpayers for the model.
Yeah, in this case of the David has talked about is something that is easier to reach the services, to having a pure electronic invoice system in place than if you have fiscal devices in place, because you know for this kind of taxpayer that only have doesn't reach 200 or 300 operations a month, can be too expensive to have a fiscal device. And if you have a pure electronic invoice system in place, you can get the invoices from this kind of taxpayer also in a very rapid way.
And to facilitate the compliance, the tax administration develops the software. And
yes, of course. Mm-hmm.
It's free to use for
all tax administrations do that, put made available for taxpayers a free app that can be used for issuing electronic invoices with no cost. Okay, you have to have your device, you have to have electronic internet access, but you have that for a WhatsApp, so that's already achieved.
Right. Thank you. Thank you very much for that conversation and the feedback. I want to move to what I would consider final question based on the time that is left. In the context of the question is as follows. Given the rise of click and mortar businesses in which buyers and sellers within a tax jurisdiction meet online, preferably through a social media platform, discuss terms of business and complete the payment process through a separate payment gateway. Thus, under such circumstances, the issuance of the invoice becomes inconvenient at best and discretionary at worst. Note, in most cases, these payment gateways are offered by third parties, that is financial intermediaries, mobile money service providers. So this is the question. Are there easy to adopt tailor-made solutions that can be used to integrate payment gateways to enable the issuance of the invoices for business transactions?
Yeah, this is a very good point. Is the integration with of the payment systems with the invoicing systems. And then here we can touch a sensitive question that some countries have a constitutional right of secrecy on financial operations. So in this kind of country, tax administration is not allowed to have the information on the payments unless there is a judicial process in place. So if this is the situation, I don't see how in a tax administration view can be put in place an integration. But in the other side of the question, we can see what the United States are doing with the Business Payment Coalition. It is an initiative of the Federal Reserve Bank. So it's totally the opposite. It's not a tax initiative. It is a financial initiative in order to facilitate payments that you have electronic invoicing put in place in a national standard in a huge country. And so this kind of thing, it real can be done, but it's real difficult. Our friend Todd Albers, who is in charge of this process, he's a senior payments analyst from the Federal Reserve Bank. He is working, the very first time I saw his talk about this, it was in 2017. And he's working since that, and just now they're getting to some results. So yes, it's a path that can be used, but it's not simple for two reasons. The main reason is, as I told you, there are countries you have secrecy issues that doesn't allow us to have it. And if it's only a financial initiative, you don't have the tax aspect. So tax authorities doesn't have access to neither to non-information about the invoices. So yes, it's interesting, and most countries in their semantic format, electronic invoicing, provides non-mandatory or even mandatory information on the payment, especially if it is a payment expected in the future, or if there is a number of payments that will be made for a single operation. So most countries have this, but as an additional information that is put on the invoice. It doesn't come out from the banking system or the actual flow of the money. That's, it's real different. There are two real different ways of getting the same information.
Thank you, Vinicius, for that. At this point, I want to give the panelists a chance to give their final word or even their take home from this conversation. I start with Hakamba.
Thank you, Jen. Thank you, David, Vinicius, for your very insightful input, and also thanking my fellow panelists from our neighboring countries because we've gotten to learn from each other, and such stations have actually gotten us to the next stage, so that we're not just talking about how we are transmitting invoices, but you're going to the next step of what we are doing with the invoice data and how are we dealing with compliance and enforcement and more issues. And I think that's a good direction that we have moved, and I'd like to thank everyone who is on board today, and also looking forward to other such engagements so that we can continue learning. Thank you.
Thank you, Hakamba. Honest?
Well, thank you very much. I think the discussion was very insightful, and I would like to thank our colleagues from SIAT. They have actually been able to respond to all of our questions, and at a personal level, I'm satisfied with the responses. However, I think there is a need to either find a way of noting down what we have been able to grasp through these two engagements so that we could easily revisit or even present the same in an official manner, of course, to our superiors. At a personal level, I will do that, but I think I have learned a lot, especially concerning the journey that one has to take to get somewhere. And I think Vinicius and David have been very helpful, especially in taking us through what is prerequisite, what you should do first, that order of things, or what to prioritize first before reaching a certain objective. I think that is very important. In most cases, we are hearing of these big words such as data analytics. You are hearing of big words such as artificial intelligence and so forth. But the question is, when it comes to application, what should you do first? You need to have a base in order to be able to deploy these solutions rather than just jumping into these solutions. And I like the example that Mr. Vinicius talked about, whereby you have an algorithm, you've spent a lot of time, and then the results come out 80% is off target. So I think there is a lot to learn. There are certain initiatives going on at the moment here on our side. A similar mechanism, especially through the issues of audit reports or selection of audit cases, how can they be selected and so forth. So it's the same thing, I think. The direction is clear, but then the ABCs, I think, there is where the gap is. So people are just jumping into the conclusions that we'll come up with an algorithm, we'll do this and that, but what should you do first? I think that is what I've been able to grasp today. I think there is a lot to do in building a base, a very strong base before jumping into these solutions. So thank you very much. I'll be following up a lot of things in the SIAT website. I've seen a lot of issues, so I'll be following up there. Thank you very much.
Thank you very much, Honest. Hassan, what is your parting shot or your takeaway?
Okay. Thank you, Jen, for conducting this session. I also want to thank just a minute, I have some members here in the background. Sorry about that. I want to thank Jen and also the SIAT team for sharing the experience, and for the TADAT team for giving us this opportunity to always come here and share our experiences. My fellow panelists, it has been a fruitful engagement. I want to thank you for sharing and also asking that we keep this platform such that we can always come, interact, and also have a one-on-one discussion as and when a need arises. I thank you so much, and have a good evening and also a good morning to the SIAT team. Thank you.
All right, thank you very much. We can't close without giving our guest speakers a chance to give their parting shot. And I want to start with Vinicius, then David. Vinicius?
Yeah, most of all, thank you for the opportunity of sharing our views more than our thoughts, and putting us at your disposal for anything else you have. You know, Kenya is a member country, and we have another member countries in Africa as well. And we just don't have, electronic invoicing in that matter. You have, as David had put out, the tool on analytics, and you have the digital economy platform, among other things. Thank you, Honest, for talking about our website. The website is totally open. There is no restricted material for member countries. Anyone can access any material that is that. And please feel free to reach out to us for any information we have. I'm sure David is more than able to give any information you should have. And again, a particular salute for my friends in Kenya and thank you for the 2 times I have the honor and the pleasure to be with you in Nairobi.
Thank you, Vinicius. David?
Thank you very much. I just want to say thanks for everybody, for the attendees, for staying with us during all the session, also for Hakamba, for Honest, for Hassan, Vinicius, for sharing this information that I think is very useful for all the attendees, as for improving our tax administrations. I desire for everybody success in your projects, and thank you, Jane, and the TADAT Secretariat for inviting SIAT to this discussion.
All right, thank you very much. On behalf of the organizing team that comprises of tax officials from different tax administrations across the globe, I want to take this opportunity to appreciate our guest speakers, Vinicius, David Borja from SIAT. We really appreciate the time that you've created for this session and for sharing knowledge. And as you have said, you are available to share more and more for us to learn from the advanced tax administrations. And I also want to thank the TADAT Secretariat, Mr. Zake and the team for creating such a platform. He talks of co-creation, peer learning, peer-to-peer learning. We don't have to reinvent the wheel. We can learn from each other. We can learn from those who are ahead of us and avoid the mistakes probably that they came across as they were implementing. That is the essence of peer-to-peer learning. So we are so grateful to SIAT for giving us these great speakers who have shared with us their experience, and we look forward to more and more engagements. We normally hold the peer-to-peer learning sessions every 2 weeks. So we have another session on 26th, and we shall invite you. It's on a different topic, and we shall be glad to have you joining us, even as participants, and also learn from other guest speakers and panelists. I also want to appreciate all those who have logged in. Some have logged in through the YouTube, others through the LinkedIn, others through the Zoom. We really want to appreciate your time, the time that you've taken to join and learn from our panelists and our guest speakers. Panelists, thank you very much for creating time again. This is a follow-up session, and you still found time for us. We really appreciate. I want to appreciate everyone whom I may not have mentioned. And at this point, we are done. It's 4:38. It's normally a 1 hour, 30-minute session. And we really appreciate what we've learned from our guest speakers. Until next time, which is 26th of January, 2023, it's a bye from me.